Here's something nobody warns you about when you start an LLC. Stopping it is just as important as starting it. If you simply walk away from your LLC without properly dissolving it, no filing, no paperwork, nothing, your state doesn't care. They will keep sending you annual fee notices. They will keep charging you renewal fees. They'll rack up penalties and interest on top of that, and in some states, they can even hold you personally liable for those debts. In fact, thousands of business owners every year get hit with back fees on LLCs they completely forgot they owned, sometimes years after they stopped operating. So, if your LLC is inactive, done, or just not worth keeping, this video is going to show you exactly how to close it the right way, step by step, so you walk away clean with zero fees, zero surprises, and zero legal exposure. Stay with me because I'm also going to cover the 5 most common mistakes people make during dissolution, and most of them are things you'd never think to check. Let's get into it. Why you can't just walk away. Let's get real for a second about what happens when you don't dissolve your LLC properly. Your LLC exists as a legal entity. It was created by the state and only the state can remove it from its records. Just stopping operations, closing your bank account, or letting your website expire, that means nothing to the state. Your LLC is still legally alive, and a living LLC has obligations. Most states require LLCs to file an annual report and pay a yearly fee anywhere from $25 in Kentucky to $800 in California every single year, whether your business made a single dollar or not. Ignore those filings and penalties stack up fast. Some states will also revoke your LLC's good standing, which can make it nearly impossible to use the entity again or even to legally sell or transfer anything connected to it. Now let's talk about how to actually do it. Step 1. Vote to dissolve. If you're a single member LLC, this is simple. You make the call and you document it in writing. If you have multiple members, you need a member vote, and the rules for that vote are usually spelled out in your operating agreement. Most operating agreements require either a majority or a unanimous vote to dissolve, so pull that document out and check before you do anything else. Once the vote happens, you need to put it in writing. Draft what's called a resolution to dissolve, a simple document that states the name of the LLC, the date of the vote, the outcome, and the signatures of the members involved. This might feel like unnecessary paperwork, but it's your legal proof that the decision was made properly, and if anyone challenges the dissolution later, this document protects you. Step 2. File articles of dissolution. You need to file what's called articles of dissolution, also known in some states as a certificate of termination or a statement of dissolution, with your Secretary of State's office. Most states let you do this online, and the fee is usually between $10 and $100 depending on your state. It's a straightforward form: your LLC name, your registered agent info, the effective date of dissolution, and a few confirmations. Here's the critical part though: file this as soon as possible after your member vote. Every month you wait is another month. The state thinks your LLC is still active, which means more fees and potentially more penalties. Once this is filed and accepted, the state officially removes your LLC from its records. That's the moment the clock stops ticking. Step 3. Notify creditors and settle debts. Here's the step people skip, and it's the one that can come back to haunt them. Before or right after you file with the state, you need to notify your creditors that the business is dissolving. That means anyone the LLC owes money to: suppliers, lenders, landlords, service providers, anyone. Most states give creditors a window of 90 to 180 days to submit any remaining claims against the business. After that window closes and you've paid or resolved those claims, the slate is legally wiped clean. You'll also distribute any remaining assets to the members according to your operating agreement. After debts are paid, the order matters: creditors first, members second. Doing it the other way around can create personal liability for the members involved. Keep written records of every debt settled, every payment made, and every creditor notified. This paperwork is your shield. Step 4. File your final tax returns. Now here's the part that trips up the most people: taxes. Dissolving your LLC doesn't mean you skip your final year's taxes. It means you file one last time and check a specific box that tells the IRS the business is done. For a single member LLC treated as a sole proprietorship, you'll report the final business income or loss on your Schedule C attached to your personal Form 1040. For a multi-member LLC treated as a partnership, you'll file a final Form 1065 and make sure to check the box on that return that says Final Return. Each member also gets a final K1. If your LLC elected to be taxed as a corporation, you'll file a final Form 1120 or 1120, again with the final return box checked. On top of the federal return, don't forget your state income tax return. Most states require a final state filing as well, sometimes with a separate dissolution specific form. Step 5. Cancel licenses, accounts and subscriptions. You're almost at the finish line, but don't stop here. After the state and tax filings are done, you need to go through a final checklist of everything connected to the LLC and shut it all down. That means your business bank accounts, close them, transfer any remaining funds out, then formally close the account in the LLC's name. Any business licenses or permits, notify the issuing city, county or state agency that the business is no longer operating. Some require a formal cancellation form, others just need written notice. Your business credit cards, pay off the balances and close the accounts. Any registered agent service you're paying for, cancel it. There's no reason to keep paying someone to receive legal notices for an entity that no longer exists. And finally, go through your software subscriptions, domain names and any recurring services you signed up for under the business. These won't cancel themselves, and a forgotten $30 a month subscription is just money quietly disappearing. 5 mistakes to avoid. Alright, now let's talk about the 5 biggest mistakes people make when closing an LLC. Mistake number 1. Filing dissolution before paying your debts. If there are outstanding creditors and you distribute assets to members first, those creditors can potentially pierce the corporate veil and come after members personally. Always pay debts first. Mistake number 2. Forgetting to file in every state. If your LLC was registered in multiple states, even just as a foreign LLC, you need to file dissolution paperwork in each one of them. Missing a state means that state still considers you active. Mistake number 3. Not filing a final tax return. Some people think that if the business made no money, there is nothing to file. That's wrong. The IRS still expects that final return with a final box checked. Skipping it can trigger notices and penalties. Mistake number 4. Waiting too long after the vote. Every day between your member vote and your state filing is a window for new liabilities to attach to the entity. Move quickly. And mistake number 5, and this one is subtle, keeping the business bank account open too long. An open account can receive transactions, incur fees or attract legal claims. Close it as soon as the final distributions are made. Avoid these 5 and your dissolution will be clean from start to finish. If this video helped you, hit the like button. It genuinely helps this channel more than you know. And if you're navigating other LLC questions, formation, taxes, structure, subscribe because that's exactly what this channel is built for. Drop your questions in the comments below. I read them all. I'll see you in the next one.